Trigger CPA CGMA, and today we're going to talk about itemized deductions. So, what are itemized deductions? Well, this changed a lot a couple of years ago. So, by default, everyone gets a standard deduction, right? That means just for existing, you get a certain amount. It's around 12,000. It's not the exact number, but it's around that. You get 12,000, times it by 2 if you're married, filing jointly, just for existing as a deduction or subtraction from your income, right? That means that the total amount of money you make isn't actually what you get taxed on. And there are two ways to calculate deductions. The first is the standard, which we was just mentioning, the 12,000-ish, right? Don't quote me. 12,000-ish. And there's something else called itemized deductions. Now, itemized deductions, there are different categories of what can qualify as an itemized deduction, and it's not so simple. So let's walk through what some of them are. Medical expenses. Unreimbursed medical expenses that you're paying for out of pocket, meaning it's not covered by insurance, right? These deductions, again, it's complicated. You don't just get to say, well, I had surgery and I had, a deductible that I had to pay and I had this doctor or co-pays, things like that. You don't just get to take that amount and call it a deduction. There's actually what we refer to as a floor. It's a 7.5% of your adjusted gross income that creates a floor, and you have to have more medical expenses than that floor to be able to deduct them. Anything up to that first 7.5% of your AGI doesn't count as a deduction. So unless you have some significant health problems, which hopefully you don't, you're not even able to take advantage of that first few percent of your medical expenses. So that's one. The next is what we lovingly refer to in the tax world as SALT taxes, state and local taxes, SALT. Now, a couple of years ago, we had a change in the tax code where these taxes were actually limited to $10,000. Now, if you live in an income tax state, like say New York or California, those income taxes you pay are what is referred to in the SALT taxes. If you own a home and you pay property taxes, those taxes are what we refer to as SALT taxes. So, as you can imagine, if you own a home and make an income in New York or in California, you probably are paying well above that $10,000 limit. And unfortunately, you're only going to be able to deduct up to that limit, that $10,000. So again, you're able to deduct them, but it's complicated, right? That's kind of the name of the game with deductions. It's complicated. So what else do we have? Charitable donations. This one is nice because for the most part, you can be very generous with your money and you can often get a good chunk of your donations granted as a deduction. So that part's nice. Now, if you're donating items, right? This has a whole completely separate set of rules over cash donations. So if you make small donations like, I give to whatever, one of the companies where they come around and pick your stuff up, or if you go drop it in those bins, things like that. If it's small, okay, not a big deal. You can say like, it's a couple $100, claim it on your taxes. If though you're doing something big, you're making a big donation, say like a car, right? Now you need to file a whole separate form and you need an appraisal, right? So donating items can once again get into the it's complicated scenario. What else we got? Mortgage interest, or kind of interest in general, but it tends to be mortgage interest. This is an area which has not been fantastic over the last few years because of our low interest rates. Hasn't been a big source of deductions for folks because you weren't paying a lot in mortgage interest, right? That was the reality of our economic situation. Low interest rates means low interest payments means low mortgage interest deductions. So that one's not so complicated. It's just the way the world kind of works in the last few years. Now, there can be complications if you've got large mortgages, right? When you're getting into very big properties or you have a big loan on that property, we can get into an it's complicated situation even with mortgage deductions. But for most folks, it's pretty straightforward. You get a 1098 form from the bank or from your lender, and you're able to deduct that. Um, Now, sometimes people ask about things that what we used to refer to as the 2% miscellaneous deductions. Those went away. Those went away with tax changes a couple of years ago. So there's no like unreimbursed job expenses. If you're like, oh, I used to, take out clients on my own dime and not get reimbursed by my employer. Well, that all went away, sadly. So that's not something that's available anymore. Um, Safe deposit boxes, um, tax preparation fees. There was a lot of these things that went away in the last couple of years. So, just a quick recap, right? We're looking at, for the most part, medical and dental expenses over the 7.5% AGI floor, SALT, state and local taxes, only up to 10,000, mortgage interest for most people, gifts to charity, right? That's going to be the bulk of your itemized deductions. And then what you need to do is make sure that those itemized deductions are more than the standard deduction. Otherwise, there's no reason to claim itemized deductions. I mean, you can if you want to, but you don't have to. Now, a game that we can play, because a lot of tax is games, is if you can make sure, especially for us Floridians, max out those state and local taxes, right? So for us, we'll pay two property taxes in 1 year, one at the end of the year, one at the beginning of the year, right? Get the timing right. And that same year, we'll also make very large charitable contributions, and we'll make sure that we stack those together in the same year so we get like extra bang for our buck. It's all about managing, it's about planning, and you know what? These things are set to change. So who knows what happens in the future? But do you have any questions about standard deductions? I'm sure you do, because it's a lot of information and it's not easy. Drop a comment, like, share, contact my office if you have even more questions or to find out more about your specific scenario. And we will see you next time.